Well, hi everybody, Mindy here, and I know a lot of you put the EA onto your demo accounts, or some of you put them on your live account Saturday over the weekend, because we had our class for people who were ready to start trading the Magic EA, you know, the auto trading EA on their live accounts or their demo accounts for the first time today. You know, today's the first trading day that they have put the Magic EA on their trading accounts. So I have an account here which I set up on Saturday. It's a demo account, but it is essentially giving me all of these same trades in my live account too. So I have these trades in my live account too. But what we see is if we go to the account history for today, actually we actually have to open the window up bigger here to even see all of the trades that the EA closed for today. I'm just going to go ahead and open this window big enough so that we can find out how many trades we closed today on the Magic EA. There we go. No, I still don't have the whole list. Let's make it just a little bit taller. So here, this should do it. Okay, so now what we can see is a complete list of the trades that closed in the account so far today. Now, the thing is, today's not over. Okay, right now it's noon. It's noon o'clock. Okay, so we still have 4 more hours of this trading day, right? And so what I'm doing here is I'm just adjusting these columns so that we can see what kind of trades went in. Then I'm going to add a little bit to this so we can see what pairs. In fact, I'm going to move this over. Well, here, I'll move this box out of the way. That would probably be the better way to show you this. But what we've got in our account history, we have all of the trades that have closed today. And let me go ahead and make all these columns just a little bit wider so that we can see the prices of where the trades entered, where the stops were, where the profit stops were, what price they came out at, and then over here at the end we can see what kind of trades they were. Now, here's one good thing about the EA. Today there were a lot of series trades. What series trades are, they're second level trades. So if you have one trade that goes in and then the price keeps moving whatever direction it was moving to put the first trade in, a lot of times if it goes far enough, the EA is programmed, as you know, to put in another trade. So anyway, today we got a lot of series trades, which is a good thing, because typically the series trades will close for more money than the original trades do. And a lot of times these series trades will actually hit their profit target. That didn't happen today. We didn't have any trades close at their profit target today, right? But we did have a lot of them close out on their stops. Now, the EA is programmed that when a trade is a certain amount profitable, it's going to go ahead and add a profit stop for you. And then it's going to move that stop appropriately as the profit in your trade grows, right? So some of these trades closed right away after the minimal profit stop was added to them. Others of them had a chance to get a little bigger, right? And they all had profit targets of somewhere around 20 to 30 pips. Because these trades are going in off of a 15-minute chart, which is a very short time frame of a chart, right? Now, this profit for today isn't necessarily a problem, right? who wouldn't want 50 extra bucks in their account so far today? But here's the issue. The issue is, and wouldn't you know, the first, it never fails. The first time I put a bunch of people on a new trial, it never fails. We have a really crappy day. Overall, this was a horrific day for the EA, because so far for this trading day, what you see is that currently there are 2, 4, 6, 7 trades. 1, 2, 3, 4, 5, 6, 7. That's correct. 7 trades that went in. Oh, now there's 8. We just got a new trade that went in. But of the trades that have entered, 7 of them have gone significantly ugly, right? So right now we're running a $350 almost negative PL, right? So this really sucks for a brand new day on a new EA, right? But anyway, I'm going to give a class tomorrow night, or tomorrow afternoon, evening, sometime, where I'll be showing you what to do about this. But because of the fact that I started so many people just this weekend on new accounts where they are now trading the auto trading EA, we couldn't have gotten off to a worse start. Now watch this trade here for a minute. This trade just went in a few minutes ago, and when it gets to have about $4 or $5 of profit in it, what's going to happen is it's going to automatically add a profit stop. And so once it has that profit stop on it, this trade will not be able to go underwater, right? Because it'll stop out for a small profit like some of these trades did, right? If the price keeps moving down. Right. So anyway, what I did, just to show you an example of how we manage these trades, what we see in our trade list of things that opened and are currently ugly, what we see is most of these trades, 1, 2, 3, 4 of the 7 trades that are a problem are in the USD JPY pair, right? And so most of the problem that we have here is with regards to how the USD JPY pair moved today, right? So what I did is I brought up a 15-minute chart, right? This is just a 15-minute chart, and I pretty much have most all of the trading day for today in here. Now, actually, the Sunday trading day started right over here where we had the gap, right? And then the price went up, went down, went up and down and up, and then it reached its high right up here. So we really aren't concerned with anything that is left of the high on the trading day. So what we're going to do is just scroll forward a little bit and take off some of that earlier in the day time, right? Because what we want to be able to see is we want to be able to see the high of the day and where the trades went in and where are we now. Okay, so these are the 3 important points that we have right now. Okay, so what I did is I put lines on this chart to represent where these trades entered. Okay, so and you can see that I've got the line going through the bar that represents the time that the trades entered. Okay, so what we see, and this is a common problem with the EA, but luckily it's a situation that doesn't happen real frequently. But what happens is when something happens in the market and we have one of these big moves, you know, where all of a sudden the price is kind of doing its thing, it's going up and down, and Forex prices always go up and down while they're going up and down, right? So anyway, what happened is something happened this morning in the market that shook up the market, and this pair, as well as a lot of the JPY pairs today, just really started going JPY positive, right? And my guess is it was usually when you see all of the JPY pairs start going JPY positive, it's usually because of a situation that has the world on edge. You know, and I'm not sure what that might have been at 3:30 this morning. Might have been news regarding something with the Brexit or something like that. It could have been something regarding trade, trade wars between countries, whatever. Could have been anything, doesn't really matter why. The only thing is the price took a big tumble. Now, if the spread had widened during the time that it was taking this big dump, what would have happened is the EA would have kept these trades from entering, right? But that didn't happen today because whatever caused this market to drop did not create a situation where the spreads widened on the pairs. So anyway, what happened is the EA hit levels right through here where it was saying, okay, it's time to make a trade. And actually this top trade right here, well, let me do it this way, I'll just point to it. This trade was the first one that went in that had a problem, right? And it went in at 113.62. It was an original trade, right? Then we had the next one that went in at 113.50, which is right here. This is a second level trade that went in because the price went a certain degree lower, certain amount of pips lower than this original trade. Okay, then this next one right here at that entered at 113.44, this was another original trade, right? And then the fourth one right here, 113.38, this was a series trade, so it was a second level trade off of this trade, right? So what we actually have is we have two original trades and two series trades. But who cares? We still have four trades that are ugly, right? The worst one being $63 as far as the worst one in the USD JPY. So now we have to decide what on earth are we going to do with this problem, right? Well, there's a lot of things that we can do with this. Now, in the first place, what we know about the EA is that if any of these trades goes 100 pips ugly, what's going to happen is it's going to automatically hedge the trade. So none of these trades has the possibility of getting more than 100 pips ugly before they will hedge, right? So that's a good thing. Let's go ahead and take a look at that in the instructions of the EA so that I can show you. So we don't really have anything to worry about other than the fact that the trades are going ugly, which we don't like, but we're not going to be all panicky about it because we know that they can only go so ugly before they're going to hedge out. So in the EA, which those of you who are using it know how I explained it all to you, but when we go down here to the hedge, see, we are going to automatically hedge the trade at 100 pips. So we don't really have anything to worry about yet, right? But who wants to watch 7 trades go 100 pips ugly on the first day you have the account open? You know, there's just, what could be more depressing than that? But what I want to tell you is it's not nearly as bad as it seems. Now, in the first place, when these trades are entering, what we want to do is we want to keep an eye on them, just like this one that opened a few minutes ago, and after it opened, we'll just put a line down here so that we can see where this trade opened. So I'm going to go get my correct tool then I'm going to go check the price on where this opened. This one opened, well, it was a different pair, but it was 129.54 in Euro GBP. So let's go mark that one on the chart. So we go to Euro JPY, not GBP, and this trade opened at 129.54, which would have been in this bar right here, 542. We'll try to get it as close as we can. We'll set that line in at 542. So now we know that it's spot on the money. That's where this new trade entered. Now, right after it entered, you saw that it got up to about $3 of profit, but it didn't get up high enough to put the profit stop on the trade, right? So what happened is it went a little bit ugly, right? And so now this current bar is starting to pull back up, right? So what we'll do is we'll watch this. Now, if this bar comes up above this price, we don't have to wait for the EA to put a profit stop on the trade. If we want to, we can put a profit stop on the trade ourselves. We can do it manually. And that way, once it's profitable, if we want to put a profit stop on it, we can do that, right? No problem with that. Now, one thing that you want to make sure that you do, see the commission here? Well, the commission for this one mini lot trade was 92 cents. Well, that's almost a pip in and of itself, right? Because a one mini lot trade is going to be approximately, depending on the pair, $1 per per pip on a one mini lot trade. So now every pair is different. You guys know that. So some pairs the pip value is 70 cents. Other trades the pip value is $1.30. Whatever, right? Pip values can change, but in general, a one mini lot trade is going to be approximately $1 per pip in value, right? So now what we see is that our trade is starting to get profitable again, right? So if I was worried about this trade, maybe because I thought, oh, this pair looks like it could take another big dump down, I could go in here and put a profit stop on. As long as my profit stop is protecting more than 92 cents, then I have covered the cost of the trade, right? So I wouldn't want to put a profit stop on the trade until the profit over here in the profit column was more than the cost that it cost me to go into the trade, right? So I'd want to make sure that this number was bigger than 92 cents, right? So we'll keep an eye on this just for a minute, right? And if we want to, we can add a profit stop and let this trade stop out for almost nothing, or we can hang on to the trade and let the EA manage the trade if we want to. It will add a stop by itself, right? It will also close the trade if it reaches the profit target, which is set, as you can see, at 20 pips, right? But now, would we expect for the price to move up 20 pips from where it is right now? I don't know. Let's find out, right? So what we know for sure is that we've had a big move down today, right? So if we've had this big move down, what we need to do is we need to figure out, okay, how far has the price moved down today? So what we want to do is essentially measure from the highest point that we've had so far today and the lowest point that we've had so far today, right? So the easiest way to do that is to go grab a Fibonacci. And what we're going to do, we're just using it for a measuring tool. So I'm just going to start a Fibonacci over here at the lowest price I can find on the day. I'm going to run that up, and when the crossbar is at the highest price that we've had today, I'm going to measure that number. Okay, so there, I think I've got it, right? So that's the high price for today. This is the low price for so far today. And don't worry about it if I got my line a little crooked. It doesn't matter. All I'm looking for is an idea of whether or not I think that this current price could move on up, and if so, how far, and would it move up enough to take this trade that just entered and hit a profit target of 20 pips, right? Well, okay, if our trade went in at this blue line, 129.54, and the profit target is up here at 129.74, which would be right about up here, I have to make a determination if I think the price could do that. Well, if the low that we've had today is, in fact, the low that we're going to have in this trading day, then yeah, I don't think it's going to be an issue to get back up to 129.74, right? Because what does the price do? It goes up and down while it's going up and down, right? So no problem here. I'm not going to be concerned about this trade. But the fact of the matter is, I do still have another EUR-JPY trade right here that is right now 60 pips ugly, right? Now, will this one come out today? No, I don't know. I'm not so sure about that. So if I've already got this one that is 60 pips ugly because it went in at 130.24.7, so that went in. Let's go make a line for it. We'll go get our price line, 130.24.7. Okay, so it would have gone in this price bar. Oh, I had it there for a second. Right there. Okay, so we still have this trade that we're worrying about too. Okay, now here's how we kind of figure out what we think we need to do about these trades. Well, well, it looks like we don't have to worry about this one anymore, because let me show you what happened. The price went up enough to add a profit stop to that trade, and almost immediately after it added the profit stop, the price took a little jiggle back down and closed it. So no problem there, right? That one's done. Doesn't matter anymore because it's gone, right? So what we'll do is we'll delete that line off of this chart because we don't need it anymore, right? But we still do have this other trade sitting here. Now we need to decide what we think might happen to this trade. So what we did here is we took the highest price that we've had today. We took the lowest price that we've had today in this trading day. It doesn't mean that the price might not go lower. It means so far this is the low on the day. Now if this in fact is the low for the trading day, when you've had a big move like this, what you have to consider is that a lot of times the price will rebound somewhere between 38% to 62%, and a lot of times it'll go back up 50% of the move that we've had. Now if you want to see these, what I can do is I can click on this Fibonacci, and why don't we go ahead and carry it across the entire page so that you can see it. I'm still going to keep the bottom line on the low price that we've had today. I'm keeping, obviously, the top line on the high price that we've had today. So the price has gone from here to here. So essentially, and I've actually built it upside down, so let me redo it so that you can see it in a more proper fashion. What we'll do is we'll start up here at the top at the high price. I'm not putting the cursor right on there because that makes it to where I can't see it. So I'm bringing it actually over here, but I'm lining up the horizontal crosshair with the top price of the day. I'm putting a click there. Then I'm going to go down here, do the same thing with the low number. I'm going to pull it off a little bit so that I can get the crosshair set with the low point on the chart. Right, so when we know that we've had a big move like this, one of the tools that you can use in Forex trading is you can use Fibonacci's. Now, this doesn't mean that we're going to live and breathe by Fibonacci lines. We're not. This is just to give us an idea of if we think this trade has a possibility of coming back today, you know, maybe in the next 12 to 24 hours, right? So if this is in fact the low price for this trading day, and if we're going to have a normal retracement of a move, right, then the price should actually come back to somewhere excuse me, I've got the hiccups, somewhere between these red lines. The first line would be a 38.2 retracement of the move down. The middle line would be a 50% retracement. And the top line would be a 62, essentially, percent retracement of the move down. So a retracement move for today could possibly come somewhere between these three lines. And here is the trade that we have on, right? So it's kind of between the first retracement level that we would expect and the second, right? So the option is, now what will happen if the price continues to go down? Then what would happen is let me duplicate this line, and then we'll move this new line down 100 pips. I think it would be this one. So if this were to go down 100 pips, that would put us at 129.24, right? So if this trade gets this ugly right here, then we are going to need to pick up a hedge for this trade, right? But if the price goes up from where it is right now, it might go up here and pick up this trade and make this trade profitable before we need to put a hedge on the trade, right? So what we're going to do with this, because if we really think that the price gets up here and has some kind of rebound, if we think that the price is not going to make it up to our trade, but maybe the price gets back up here somewhere, it'd be a whole lot closer to our trade, right? Then in that case, what we would want to do is we would want to go ahead and hedge this trade out before it went fully 100 pips ugly, right? But the reason we haven't done that yet today is because so far we have not had any indication from the time the price started falling until now that we thought we might be at a B point in the Fibonacci retracement, right? And we're not sure if this is B or not. We got to wait it out and find out. We won't know if this is B until the price gets up into here, right? But if it is B, then we would fully expect the price to come back up here and make a C move, because with Fibonacci you have an A, a B, a C move, and then you'd have a D move that would be much further down, right? But right now we don't know what's happening. So we do know that if our trade gets 100 pips ugly, then it will pick up a hedge, and then we'll have to deal with it. So instead of being, let's go back to the trades so you can see it. Instead of being a trade that is right now 55 pips ugly, then this trade would be 100 pips ugly, but at least we know the downside risk in the trade, right? Because once it hedges, it's not going to matter where the price goes from there, because we will have trapped the 100 pips, or about $100 of negative equity in the account. It's not going to get any worse, no matter which way the price moves, right? Same thing with these trades on the USD JPY. Let's go look at those again. Remember, on these we had four trades, right? And so far, none of them have gotten 100 pips ugly, right? But still, we're not the least bit happy that one of them is 64 pips ugly, and one of them is 53 and 47, and where's the other one, and 42. We're not the least bit happy that we have these trades in here, right? So what we need to do, though, we need to figure out are these trades reasonably expected to come out if the price has hit the low for the day, right? So what we're going to do, we're going to come over here, we're going to slap a Fibonacci on here. What we're going to do is we're going to go from B, well, let's go from A to B so you can see the numbers in the right order. So I'm putting the crosshair up here where I can tell that I'm getting the high price of the day, and then I'm going to bring it down and put the other crosshair down here where I can line it up with the low price of the day. Bingo, there. And so if this is the low price for today, and we should expect that the price might bounce up to somewhere between the red lines. But what we see in this case is that, oh my, this first trade that went in is probably not coming out. Not today anyway, right? I mean, it could, but it's probably not going to happen today, right? So that's one that we're kind of going, yeah, that's a real good candidate for a hedge, because even if the price did come up into this retracement area today, if it's a C move, an A, a B, a C move, then what we should expect is the next move down to come down into this area down here, right? So what we might have picked up today is a trade that we might have to manage to get out of it, right? So how are we going to do that, right? Well, that's one of the things. There's a lot of ways to do that, and that's what I'm going to be teaching in the class, which I'm going to schedule for tomorrow, and I think it's going to be tomorrow night. Okay, now everyone who was in the class on Saturday, or people who bought the the workshop on demand, the Saturday workshop about the EA, everyone who was in that program, and all of the people who have been helping me test the EA, all of you are welcome into that class tomorrow night, free of charge. Okay, but if you are not one of my beta testers on the EA, or you were not involved in that class or have not taken it on demand, you will not be eligible to be in that class. And I think we're going to do it tomorrow night, and I think we're going to do it at 10 p.m. tomorrow night, because I have a class tomorrow at 7:30 p.m. that will go for several hours. So we'll do this class at 10 p.m. Tuesday night. That's tomorrow. And that time is in Central Time. So please do not confuse that with your own time zone. The class will be recorded. So if you're eligible to attend it and you miss the live event, then just send me an email and I'll send you a link so that you can view that class even if you can't be there for the live event, right? But there are a lot of ways to get out of these bad trades. Okay, the first one is just kind of knowing what are we really dealing with here, and finding out if you think that there's a chance that these trades could come out today or not. Because if you think they have a good chance of coming out, you just want to leave them alone. If you think that they're probably not going to come out anytime soon, then that's when we start taking, trades to mitigate the negative impact of these on our account balance, right? So anyway, today could not have been a more horrible day to start all of you trading the new EA. And I know some of you are trading it in a live account, and most of you are trading it in a demo account, but this is a horrible way to start the first day, But the thing is, what could we have done with this at the time? Well, the thing is, this first trade went in at like 2:30 in the morning, and that's my time. Well, I gotta tell you, I was sound asleep at the time that this trade went in. But what we should be doing, just like on that trade that entered a little while ago, when you are awake and when you are at your computer, you should be watching the trades that are entering. And if they are trades that would not be trades that you would have taken if you were choosing trades to take, then you want to watch them like a hawk, and if they get a few dollars profitable, just X them out or book the profit off of them for a couple of pips. Don't let them go ugly. So let's go put this on a shorter term time frame and see. And right now what I'm going to do is I'm going to go ahead and delete the Fibonacci lines, right? So that they won't be in our way. So I'm going to delete those. But then what I'm going to do is I'm going to put this on a shorter time frame and see if some of these trades might have been able to come out if we had put the stop on manually instead of waiting for the stop to go on by the EA, right? So what we're going to do is we're going to go up here, we're going to change the time frame of the chart to a 2-minute chart. Now, when we scrunch up the 2-minute chart, what we'll see is, oh, there's the lines, right? So we can scrunch up the 2-minute chart in a way that we can see that, in fact, I'm going to do this. It doesn't really matter where the price is right now, because what we want to find out is from the time the trades entered, could we have added a profit stop on them and kept them from going underwater, right? So what we see is that on this first trade, it actually would have entered the first time the price hit this price point. So it would have entered in this bar on a 2-minute chart, right? Now, what happened after the trade entered? Well, the fact of the matter is the price did go up a bit, right? And let's see how far it went up. The trade entered at 113.624. The price, the high price in the next bar was 113. 638. So that's 1.5 pips, right? Theoretically, that would have been enough that we could have put a 1 pip stop on that trade, right? Kept it from going ugly. If we'd been there at the time, I probably would have done that just because, or I would have just X'd it out, booked it off when it was about a pip of profit. Because the thing is, looking at that 15-minute chart, you could tell the way the chart was moving that it was not going to probably stop anytime soon, right? And so anyway, that one we might have gotten out of if we were watching it at the time that it went in. Now this one, no, probably not, because it went sailing through here. It didn't even look back. So this one we'd be stuck in for sure. Same thing here. This one would have never given an opportunity to get out of it. But this one that entered right here, after a few hours, that trade actually got 3 or 4 pips profitable. And I know because I was actually watching it right in here about 7:30 this morning. And I saw the trade get profitable here. I got up this morning right about here is when I woke up, right about 6 o'clock. And the trades, these 4 trades were in there. They weren't nearly as ugly as they are right now. But I did see this trade get profitable several times. And I chose not to put the stop on manually, actually, because right here I really thought that this trade would put the stop on. It only would have had to go up about another 1/10 of a pip, and it would have automatically put the profit stop on this trade. But I didn't do anything with it because I thought, yeah, we could maybe go up more and get out of most of these trades. The reason I thought that is because at that point in time, when I took the Fibonacci and I looked at what's the low price that we've had so far today, which was here, right? So what I was doing is I was looking at where was the high price for today, where was the low price until that point in time, and I was looking at the fact that our retracement levels were right up here in the mix of most of the trades. So I wasn't really worried about this trade, right? But then what happened? You know, we took this next tumble down, and now here we are way down here, right? So anyway, that's what happens with Forex, and you never know for sure where the next price bar is gonna go, right? But we don't need to be totally alarmed. There's nothing scary about it. But what we do need to know is that theoretically all of these trades that are currently in here could potentially hedge to, you know, in the next 12 to 24 hours. And if they do, what we will have is 1, 2, 3, 4, 5, 6, 7, about $700 trapped in negative equity. But it will be limited to $700. And I can tell you for a fact that when you trade the way I do, the negative profit that gets trapped over here is temporary. Because what we do is we never close trades for losses, right? So what will happen eventually is we will hedge these trades. I'm not sure if we'll wait for them to get 100 pips ugly or if we're going to hedge them now. Now, if we'd like to know, if we'd like to get an idea about that, then what we do is we go, instead of going from a 2-minute chart, what we probably do is go to a 1-hour chart or a 4-hour chart, a higher time frame, right? We still have, here's our trades, Thursday, Friday, Monday, Sunday. Here's the trading that's happened so far this week. So, but what we'll do is we'll go over to where we can see, well, where was the high on this 4-hour chart? Well, it was way back here 3 or 4 days ago, right? But this 4-hour chart looks remarkably like the 15-minute chart. The only difference is the high on the 15-minute chart was from today. The high on the 4-hour chart is from days ago, right? But the charts kind of resemble each other, don't they? And all of these trades happened in this one 4-hour bar this morning, right? So what we can see, if we look at a Fibonacci situation on this 4-hour chart, what we can see is from a couple of days ago, what we had is a Fibonacci situation that this was the B point, this was the A point, A, B, C. See, we had our C move that came in right in the middle. So this Fibonacci sequence is actually looking for a D move that could come right down in through here. And sure enough, we did come right down in through here today, and we're actually headed for a 200% retracement of this, a larger time frame Fibonacci structure, right? So if this low is going to keep coming down, where should we expect it to come? Right down here, 112.71. And guess what? That's right in the same range where these trades will start hedging, right? Never fails. So in fact, let's go and put some lines on where these trades would hedge. So what we'll do is we'll duplicate this drawing right here, and it's at 113.62.3, so we'll pull this one down to 112.62.3, right? And the best way to do it is to edit it, and we want it at 112.623, right? And then we'll hit OK. Okay, so this is the line where our first, we'll also make this a red line so we can tell what it is. There, it'll be a sell trade if it's going to hedge buy trade, right? So this would be where our first trade would hedge, okay? And that is in fact below the 200% retracement. So there's a very good chance that this price could come down into this area here, not pick up our hedge, and then start moving back up. And ultimately, all these trades could come out positive, right? So in this situation, I think for right now, I'm not going to do anything to hedge these trades, because I'm not so sure they're really going to be bad trades in the bigger picture. Now they might be, and if they do, you know, they will hedge at 100 pips. And if they do hedge at 100 pips, it's no big deal, because what we'll do is we will put a fixer trade on there to fix the situation, right? But if we want to go to an even larger time frame, like a daily time frame, okay, well, when we look at the daily time frame, oh my gosh, you know, we've been up and down and up and down and up and down. Who knows where this puppy's going, right? But if we wanted to get a more recent picture of what's going on, then what we would do is, we'll leave those lines there. We'll take the Fibonacci off the daily. And what we'll do is we'll say, well, where's the Fibonacci situation on the daily, since we have been moving up? So if we wanted to figure that out, we just go in here, we grab a Fibonacci, and you know, there's all kinds of moves here. But if we want to take this most recent move, where we have not yet had a C move, then we would say, okay, this was A up here, this was B right here, because we're looking for the last move where we have not yet had a C. And so, you know, I mean, this would be A, this would be B, and C sure enough, we're looking, even on the daily chart, we're looking for a move back down in between these three red lines. Here's where our trade would hedge, but potentially we could be going down to here, you know, right? So yeah, what we'll do is we'll just leave these trades to, if they want to hedge, we'll let them hedge. If the price comes right down in here and then turns around, doesn't pick up the hedge, then these trades could be literally headed in the bigger picture. When we look at the bigger picture, if this is an A, B, C, D move, eventually these buys are going to be just fine, because this in the bigger picture is where the price is headed. But a lot can happen in a day, and it could take days and days, maybe weeks, for the price to get up here, right? So that's why we can't make all of our decisions off of what's happening on the bigger time frames, right? So for right now, what we're going to do, we're going to come back to the time frame where we entered the trade, and that is a 15-minute time frame, and we really only want the data for what was the high today. So in this trading day, there's the high, there's the low so far, right? That's a little bit lower than the low was when we started talking almost 45 minutes ago. So the price has come lower. So what we thought was B half an hour ago, we're finding out, nope, that wasn't B, because we're still getting lower lows, right? We won't know for sure where B is until we start getting bars, price bars that have higher highs, and would then go higher highs up to essentially a minimum of a 32% or 38% retracement, which would be right between here. Okay, so anyway, this is the stuff that I'm going to start teaching you in the class tomorrow, and we will have that class at 10 p.m. tomorrow night. That'll be right after my fall fling class, which goes from 7:30 to 9:30, and so we'll start this class at 10. Hopefully this will be the you know, some of these may come out between now and then. If they don't worry about it. Let them go ahead and hedge, okay? And we will take care of it tomorrow. It's not a problem. It's an ugly problem, right? Right now it's an ugly problem. Could get uglier, because if the trades hedge, they're going to be more ugly than they are right now. They're only going to hedge if they reach 100 pips of ugliness, right? So don't worry about it. It's all good. I can assure you that all of these trades will end up as a positive equity situation in the account sooner or later. Just a matter of when's later, right? And that's not that big of a deal. Okay, here it is. Here is, as you know, I've been running two demos side by side. This one we've been managing the trades. This one we have not been managing the trades. And these have been running for, I don't know, five and a half weeks, something like that. Today, okay, let's go in, custom period. Today, okay, today this one only did $18. The reason for that is because the computer that it was on had a power failure, and it was turned off for quite a bit of the day. The account that it is being matched to was not on on a network that had a power failure. So in these two accounts, this one made $81 today, but it also left 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. There are 13 open positions at this current time. Okay, this one where the power was off for most of the night, unfortunately, because it was on a different circuit, it was turned off, but it was kind of a blessing because during the hours that these bad trades entered, what happened was this account was not on at that time, so it didn't pick them up. But this is the first time that these two accounts have had this issue where one of them was not running and the other one was. But doesn't really matter, you know. But it does show you the huge difference that it makes. The equity over here is 9,600. The equity over here is 12,515. And you guys remember, the ones of you who were in the class on Saturday, you remember that this had a trade that was $70-something ugly, right? On Saturday, it was left over from Friday. Well, that trade that was left over from Friday was this trade right here. It was $70 ugly on Saturday. The trade got good today, added the 2 pip stop, and the trade ended up closing today for, you know, $2.58. Right? It ended up closing 78.55, 78.53 for 2 pips. You know, so whatever. You know, but the thing is, there's and these trades that we're in today, I'm going to go ahead and park this back down here where it belongs. And but the thing is, some of these trades that went in here today, in this account that we just started fresh today, right? These could be the same way. These trades could get 70, 80, 90 pips ugly, and maybe by tomorrow they'll be profitable trades, right? So anyway, this is what we're going to do tomorrow in our class. And to, if you want to come into the class, send me an email. You guys know my email address, right? It's on my website too. Just look at my website. You'll find my email address. But you cannot come to the class unless you are someone who has been beta testing the EA for me, and I know who y'all are, so if you didn't beta test the EA, please don't send me an email and say that you did, because I've got the email list, right? And so, or people who have purchased the Saturday workshop that I did Saturday, or have purchased the Saturday workshop on demand. And you can still buy the Saturday workshop on demand. So those of you who are curious about this, want to find out more on how we do this, and you can buy that workshop on demand tonight if you want to. Anytime, it doesn't matter. It'll be on my website, right? So anyway, I'm going to let you go. I just wanted to tell you we did have an absolutely horrific start for those of you who just started trading the EA today, right? And I'm just telling you that it's not really anything to be alarmed about. It's just it's too bad that we had to get started off on such an ugly foot. For some reason, my keyboard isn't wanting to work properly. I'm trying to bring this. There we go. Got it. Brought it to the front. So anyway, oh look, we have another trade that's entered, and it is currently $1 profitable. I mean, this is the great thing about the auto trading EA. It's just going to go in and out of here and make trades for you. You don't even have to be looking at the computer, right? And as far as that goes, it did make quite a few trades today. Nothing wrong with the quantity of trades today. I would have preferred that they hadn't, so many of them hadn't stopped out for such small amounts, but that's okay. It's part of it. So let's watch this one just for a couple more minutes here and see if this new trade can add a profit stop before we close out this video. But I'm only going to give it another minute or so, okay? And if I wanted to, if I thought for any reason that this pair looked like it was going to start dropping back down, I can close this trade anytime I want to with the X. See, if I say, okay, 180 is good enough, bingo. There, I just closed it, right? Well, I tried to. There I did. Okay, so see, that's what you can do when you're watching the trades. If I've been looking at charts for this pair and I thought, oh wow, wait a minute, I don't think this trade is going to be that great, you know, you can close it off and just take 1 or 2 pips, $1 or $2 off of it right then. Don't give it a chance to go ugly, right? But the fact of the matter is, I probably would have done that with at least a couple of these UST JPY trades, which are the bulk of the problem in the account today, if I had been up at 3:30 this morning when they were going in. But I wasn't. Usually I am. Usually I am up at 3:30 in the morning, but today I wasn't. So it is what it is, right? So anyway, that's what we're going to do tomorrow. We're going to learn how to get out of these ugly situations. Okay, so I look forward to seeing you then. So I'll end this video for now, and I'll see y'all tomorrow night. Okay, but in the meantime, don't panic, don't worry. This is not a big deal. It's just ugly numbers. Eventually everything is going to come out positive. Okay, so anyway, see you tomorrow. Bye for now.